How Canada is benefiting from Trump's mistake. Current dynamic between Canada and the United States under the second Trump administration is a complex game of opportunity in the face of friction, while trade tensions and tariff threats often dominate the headlines. Canada has found strategic ways to turn certain U.S. policy shifts, which critics often label as mistakes, into its own competitive advantages. Here are the primary areas where Canada is positioning itself to benefit. To 1. The global talent brain gain. Perhaps the most significant benefit for Canada has been in the tech and innovation sector. The U.S. shift, restrictive immigration policies, and uncertainty surrounding H-1B visas in the U.S. have created a wait-and-see environment for many global tech workers. The Canadian benefit. Canada has aggressively marketed itself as a stable alternative. Programs like the Global Skills Strategy allow companies in Canada to get work permits for highly skilled workers in as little as 2 weeks. Result: major tech hubs in Toronto, Vancouver, and Montreal have seen a massive influx of talent that previously would have headed to Silicon Valley. Canada is essentially outsourcing the recruitment of the world's best engineers to U.S. immigration hurdles. 2. Strategic supply chain diversification, with the U.S. pursuing a more protectionist America First agenda. Global partners are looking for stable, rule-based alternatives. The U.S. shift frequent threats to pull out of trade agreements or impose sudden tariffs have created a sense of volatility. The Canadian benefit. Canada has maintained a strong commitment to multilateralism, being the only G7 nation with free trade agreements with all other G7 members. Result: European and Asian investors often view Canada as a safe harbor, a way to access the North American market via the USMCA United States-Mexico-Canada Agreement, while avoiding the direct political heat of Washington. DS3. The green energy and critical minerals monopoly. Trump administration has prioritized fossil fuels and deregulating the oil industry, often downplaying the global shift toward EVs, electric vehicles. The U.S. shift, a reduction in federal support for the green transition, has left a gap in the North American supply chain for batteries and critical minerals. The Canadian benefit. The Canadian government has leaned heavily into becoming a green energy superpower by investing billions in battery plants like the Volkswagen and Stellantis deals and streamlining mining for lithium and cobalt. Canada is positioning itself as the indispensable partner for the future of the auto industry. Result: as U.S. carmakers realize they cannot compete with China without a stable mineral supply, they are forced to turn to Canada, giving Ottawa significant leverage in trade negotiations. 4. Direct foreign investment FDI stability. Capital loves stability. The political polarization and unpredictability of the current U.S. executive branch can be a deterrent for long-term foreign capital. The U.S. shift, sudden policy reversals on climate, health care, and international alliances. The Canadian benefit. While Canada has its own political debates, its banking system is famously conservative and its policy shifts are generally more incremental. Result: multinational corporations often choose to headquarter North American satellite operations in Canada to hedge against U.S. policy volatility. The flip side, a balancing act isn't all winning for Canada. While they benefit from these strategic gaps, they remain heavily reliant on the U.S. economy. Trade dependency. Over 75% of Canadian exports go to the U.S. If the U.S. administration follows through on broad-based tariffs, the collateral damage to Canada could outweigh the benefits gained from the talent grab. Defense spending. Trump's consistent mistake in the eyes of allies demanding higher NATO contributions has forced Canada to finally increase its defense budget, which is a strain on their national deficit but perhaps a long-term benefit for their military readiness. The bottom line: Canada is playing a defensive game of judo, using the momentum of U.S. protectionism to pull high-value talent and industries across the border. By appearing as the boring but stable neighbor, Canada is winning the race for the 21st century's most valuable resource, human capital.